It's good to be here. We managed to escape from Western Australia and get to your lovely country for a few months until we're allowed back. So there's a short video here just to give you a bit of scale and background. We're an operating mine in northern end of the Goldfields in Australia, which produced 50,000 ounces last financial year. Profitable operation, about $20 million of profit and $30 million of cash flow from the operations. While that was happening, we've been heavily investing in drilling and mine development and construction to then take that production through to 120,000 ounces, which we expect to achieve commercial production for that middle of next calendar year. The concentrator is going to be commissioned in about 2 or 3 weeks before the end of the year. And the mine is ramping up to full production now. We're a very large single location resource, which we put an announcement out yesterday regarding an update on that and produced some fairly high grade envelopes to demonstrate to people how much we can do with the grade. We're currently focusing mainly on the 2.5 gram plus envelope, where we have quite a sizable resource base. There'll be new reserves coming out in March that support the current construction work that we're doing, and then also talking about an expansion to double the production to about 250,000 ounces a year. We've actually reset the whole team, cleared up the balance sheet and put a new strategy in place over the last 18 months to then look forward. We have some good relationships. The offtake that currently is in place for the next 3 years is 70% polymetal, which some of you might know. They're listed here on the main board in London. And we also have an alliance with them to share technology on refractory processing in Australia and going forward. Traffic Euro is taking 30% of the concentrates. We have a local oil and trader as our debt provider at the moment, Mercuria. They're also based in London here. Before I go on to this corporate slide, we are in trading halt at the moment, pending an announcement on a placement or capital raising, which we're completing, which will be announced on Monday morning, essentially. So we've got about 160 million shares on issue. We closed, I think, this morning at around $1.10 or something, and $1.09, sorry. We've got a shareholder out of Germany that owns 34% of the company, Delphi Group, which is basically Thomas Zuers. We've got Franklin Templeton, another group out of Toronto, a few shareholders here in London as well. They're all, and we also are at the moment in the process of finalising arrangements to list on the Standard Board in London, which probably will be about the middle of January this year, this coming year, sorry, 2022. We have added recently a couple of directors to the board. In particular, Lisa Mitchell's joined us. She's actually a local director here. She's been on a few boards on the main board in London, with a view of giving us a local presence on the governance and other matters. So we're a world-class location. This is a world-class geological asset that's had to be reset in terms of the direction. We've put significant infrastructure in place in the last 18 months to support where we are today. We built a new concentrator, as I've said, with 8,500 metres of development in the underground mine already, and we are looking forward to starting production and demonstrating the first quarter of production from this new concentrator by the end of March coming quarter. The numbers we recently published, most importantly, we've published a high-grade mineral envelope of 3 million ounces at 5.8 grams. And then for the initial phase of production at this 750,000 tonnes per annum, that high grade can actually support production for more than 10 years. And we expect reserves to be well over 10 years by the time we publish those in March. And we continue to work on obviously doubling production. The interesting thing here, the long section here is interesting. There's a lot of people that publish ounces per vertical metre and drilling intensity. We've only partially drilled this ore body down to 600 metres, and it's been around for 100 years. It's already at 15,000 ounces per vertical metre and we continue to build on that. And as you can see, the drilling intensity is very much correlated to the ounces per vertical metre. So as we drill the next phase between 300 metres vertical and 600 and then at 1200, we expect this inventory to continue to increase significantly. Again, this is out of the new work that's just been published. The important thing to look here is again, at the current scale, the first stage concentrator we're building, we've got 2 million ounces of 7.4 gram material which we could feed into that if we chose not to actually expand beyond here. We are currently focusing on the 3 million ounce envelope because that supports producing saleable concentrates and operating at a higher grade. We will obviously in due course do studies to continue to broaden that envelope and try and commercialise the lower grade material. But that's going to happen over the next 2 or 3 years. The main focus now is to try and expand beyond what we've built already. That will mean doubling the mine to about 1.5 million tonnes per annum underground and expanding the crushing milling circuit and the concentrator to go about 1.5 million tonnes, take us to 250,000 ounces of production a year. So that's our sort of roadmap, which is again out there on the website if you want to check our material. This is a pretty short presentation, so I won't dwell too much, but we're beyond that grey area now. We're literally at the point of commissioning stage 1. When we get to March, we'll have stage 1 commissioned, a reserve republished for it, and we'll have a reserve production plan, all the financials associated with a feasibility study to double production over the next 18 months after that, published for the market to see. And we continue to, as I say, do studies and metallurgical work and engineering on where we take the full large-scale resource, which is currently only partially being commercialised by what we're currently doing on site. The exploration strategies come about from a lot of geological work and drilling over the last 18 months. The drilling's pointed to us where we need to go. We are very confident that in the next immediate future in the mine, we've got 3 drillers drilling below the current development areas. We'll probably add another 300,000 ounces of reserves from March next year to the next statement. The new reserves coming out of what we've just published will be over 500,000 ounces extra into the reserves, and then we'll continue to drill and expand the concept of the continuation and expansion of this ore body with a view that we're looking to add another 5 to 7 million ounces to this system in the next 3 or 4 years. That's really just the immediate in-mine work we're doing, the drilling that we'll do from March through to sort of from now to June, July, and then that'll go into the next reserve statement beyond whatever we publish in March next year. And that also supports some of the grade control work. We have 3 drill rigs operating here. Up in the top there's 3 declines into the ore body. This is only half the ore body. It's the northern end. The southern end is exactly the same strike length. So this is about 1.5 kilometre strike length. Very shallow, with a lot of existing infrastructure that we've managed to inherit. That's just a different view of the same thing. Some of the drilling results were repeated over the last, or produced over the last 18 months. ESG, we operate in a very disadvantaged community. We're obviously very concerned about that, and we take a lot of pride in working with them. And we are trying to look at wind and solar power in the next phase of development as we to complement the gas power line and gas supply we have from the main gas pipeline in WA. So look, we've got the right geology, we've got the right location. I think the environment's pretty good for us. We've de-risked the asset significantly in the last 18 months. So we believe internally we're quite ahead of the market. We don't think the market's quite recognised and caught on to what we've done here, but we expect this to be now recognised in the next 3 or 4 months. So thank you very much for listening. If you need more information, come and see me. Otherwise, the website's got a fair bit of information as well. Thank you.